In this video, we're going to start working with purchasing things. The big things that happen in a business are we buy stuff and we sell stuff. And this is the bulk of everything that we do day to day in QuickBooks. It's either buying stuff or selling stuff and then making sure everything goes where it's supposed to go. So let's talk about buying stuff. When you buy something in a business, you're either going to pay for it at the time that you buy it. For example, you are using a debit card or you're writing a check, or you're going to pay for it later, accounts payable, or you're going to pay for it using a credit card, which is very similar to accounts payable because you're going to pay it later. And each one of those things moves through QuickBooks in a different way. So we're going to start over here in the plus new button, and we're going to come to this vendors section. So everything in QuickBooks is based on, is it a customer, a vendor, an employee? So whenever you're working with something that involves buying something, you're going to be working in this vendor section. So let's talk about these different pieces. We've got an expense, and let's jump into that. So this is an after the fact kind of thing. I spent money on something. Like I wrote a personal check for this item, but it was really for the business. I used my personal credit card to pay for this, but it's really for the business. So you're recording something that happened previously, and you want to make sure it's getting recorded in QuickBooks. This is really important because business owners are notorious for doing things on the fly. It's what we do. And then we got to kind of catch up afterwards. QuickBooks wants to know what we paid for. So what did we do? Well, maybe we went to the coffee shop and we bought coffee for a customer, or we bought lunch for our crew, something along those lines. Who did we pay? Local coffee shop will be the vendor, and we'll just add whatever the vendor is here. And then we want to know how we paid for it. Did we pay for it out of our Dino operations account, or did we pay for it using petty cash? And then what was our payment method? In this case, it would be cash, or if we paid for it with a personal check, we would want to choose that instead. And then what category is this? What account does this go to? Does it go to advertising and marketing? Does it go to supplies? So if we have something set up, a subscription for something, and we have it automatically taken out of our Dino operations account, then we could set that up here. We could add in the subscription to whatever, and then it would come out of our Dino operations account. If there was a reference number, we could include that. And then we could say, this is for our cable bill, or this is for software subscription, or whatever. And then a notation in the description as to what it is. And then I can make it recurring so that every month on the 15th, this software subscription is going to hit our bank account. It's going to show up in our check register, feed through from the bank. Everything's going to be great. Coming back to the new button, we're going to look at checks. So this check feature is one of those areas where businesses end up with a mess. So the purpose of this is not to pay a bill that you've entered in your accounts payable. This is to just sit down and write checks that you haven't entered in accounts payable. Like, for example, you have to pay a freight company, or if you're out and about and you handwrite a check, we could do it using this function right here. But if you're entering a bill and you're going to pay it later, do not use this check function, because what will happen is it will not clear that bill. Those two will never meet up, and it will always look like you owe that bill because you haven't paid it through the pay bills function of QuickBooks. Now, if you don't track your accounts payable and you just sit down every month and you have with a stack of bills and you write out your checks, if you haven't entered them, you can go ahead and use this function. And this is very similar to the expense part that we just looked at. Who did you pay? And then what category, what account does that need to go to? And a description and an amount. And what's happening in the background is this is going to decrease your cash in your operations account, and it's going to increase your expense or your asset, whatever it is that you bought it. I'm going to skip down to the bottom here to this credit card credit piece of it. So I'll do a whole module about credit cards because it also goes along with this pay down credit card piece over here. So we're going to come back to credit cards. We'll just ignore those for right now. And we want to look at bill, pay bills, and vendor credit all together. So let's go into bill. This looks very similar to what we just saw with entering that check that we did. But in this case, we are entering a bill that we're going to pay later. So we bought a bunch of inventory and we are going to record the bill from the vendor here, and we're going to pay it later on. So when we enter this bill, and we'll go ahead and do a test bill right here, a couple of things. If you're adding a vendor, you need to add a new vendor. You can do that right from here. And you'll see when we had our vendors from before, when we were setting everything up, we didn't enter our vendor details. So in this case, let's say Charlotte's Web Design is at 123 Main Street. Anytown, Maine, because that's where I live, 04008. I don't know if there's really a zip code for that. So what will happen is QuickBooks will say, oh, do you want to save this for this vendor? So we can add details like that right here in any transaction that we're doing. We can add details for vendors and for customers. And what are the terms for this vendor? We don't have any terms set up, but according to this vendor's bill, they want to be paid within 10 days of the date of the invoice. So we're going to say net 10, and it's due in 10 days. So we've just set up a new payment term, and we can do this again doing a setup of all the payment terms through the accounts and settings in the gear section. But in this case, we're going to do it on the fly. And what are we getting from Charlotte's web design? We're going to put this under advertising and marketing, and we can put a description here or we can leave it blank, and let's say it's $100. So now we've got some options down here at the bottom. Again, we can make this recurring. If this is a bill that we're going to get every month from Charlotte's web, we could make it a recurring bill. In this case, we're going to say it's not. And then we can either save it and move on, or we can save and schedule payment. We can save and close, save and new. If we wanted to go ahead right now and schedule a payment for this bill through our payment service, we can do that here. And QuickBooks will walk us through using their payment service to pay this bill. In this case, we're just going to say save and close because we're just testing the waters here. So now we have a bill entered and we want to pay it at some point in time. So once we get to that point, we have a couple of options here. We can come back to our new button and we can say pay bills, or we can come back to our home screen and say pay bills. So let's click on pay bills. So we have a bill that now turns up, and this would show us all of the bills that are not paid, and it would show us the due date of those bills. This little red exclamation point right here means that this bill is overdue, and it's overdue because according to this it's August 4th and the bill due date was January 11th. So sorry, Charlotte. Oopsie. So what we're going to do here is we're going to tell QuickBooks what we want to pay. We're going to say we want to pay Charlotte's web, and it's going to automatically bring up that $100 that we owe. Now, if we wanted to make a partial payment, we can change that amount here. And then we're going to tell QuickBooks what our next check number is. So checks are always printed in sequential numbers. So let's say our check number is 1001 is our next check. So we've got a couple of options here. We can either print this check now, or we can print this check later, or we can schedule an online payment by going down here. So if we want to print this later, let's say we're paying a whole bunch of bills and we're just going to do one check run, we can say print later and then come down here and say save and close. And it will put it into a print queue where we can go back and we can print our checks. Or you can say save and print, and we're going to print these right now. It will also show us what our current account balance is down here and what our balance will be after we pay this bill. So if you're managing your cash flow, I've got $20,000 that I can pay towards my vendors. Here you can pick and choose who's going to get money this week from us. So in this case, I'm going to get back out of here because I don't want to pay this bill right now. Sorry, Charlotte. Because what I want to do is I want to go over to reports. So we're going to go to reports, and I want to look at who I owe money to. So I'm going to come down to the what you owe section, and I want to look at my accounts payable aging summary. So this is going to show me all of the invoices that I have that are not paid, and based on this date, today's date, or whatever date you choose, it's going to show me what the payment status is for these different columns. It's going to separate it out by the age of the bill. So in this case, because we are seriously overdue for our Charlotte's Web invoice, it's in the 91 and over category. And I can click right through from this report into the detail behind it, and I can see that it is this bill for Charlotte's Web, and then I want to go check it out. And you can click on anything in this line and it will take you to that bill so that we can investigate why haven't we paid Charlotte's Web. Now let's say that the reason that we haven't paid Charlotte's Web is we're waiting for a credit. So let's jump back over to our new button and come down to this vendor credit piece. So let's say that Charlotte is going to give us a credit. When we got that original bill, it was debiting an expense, advertising and marketing, and it was crediting, increasing our liability accounts payable. So now what we want to do is the opposite. We want to reduce our expense and we want to reduce reduce our accounts payable liability. And that's what this vendor credit is doing behind the scenes. So we could put a description in there saying, customer satisfaction credit or something along those lines. She's going to credit us for the entire amount. The reference number would be whatever numbering she used for her credit memo. Let's go back here to pay bills. This is going to show us that we have a $100 credit available for this bill. So we're going to enter that here. So what that's going to do is behind the scenes, it's going to apply this credit to that bill from the vendor. And you'll see right here, the total payment amount is 0. Save and close. And this automatically updates our accounts payable aging. We can now see that we don't owe anybody anything. Yay. Now, if we're ordering something that is a product or service, we're not going to enter it here under category details. We're going to come down here to product and services, and we're going to enter that we got a bill for the dinosaur shampoo that we ordered, and it's $46 per 64 ounces, and we got 10 of them. So it's going to automatically do this math for us, which is great. If there are a whole bunch of different items on this particular bill, we're going to enter those all here until we've entered the entire bill from the vendor. Now, usually when you're getting your inventory, you're going to be entering all of these down here, but there could be an extra charge on the invoice that is not for an item like shampoo. It could be a delivery charge, for example. So in that case, we don't want that down here in the product or service section. We want this up in the category section. So the category is when we're going to be applying it to an expense. And we have an expense set up for freight in. So this is freight that we are paying for to get our stuff delivered to us. And it's part of cost of goods sold. So we would enter that amount up here. Let's say it's $250. So once we've entered any extra charges and we've entered our inventory items, when we save this, it's going to do a couple of things. It's going to do the same thing that it did with our Charlotte's Web example, where it's increasing the expense for our freight in, and it's increasing our accounts payable liability. But the other thing that it's doing is this is directly impacting our inventory. So we are saying that our inventory for dinosaur shampoo is increasing by a quantity of 10. And it's also increasing the amount in our inventory asset account by $460. So when you're entering a bill for something involving inventory, it's really important that you separate these two things out. So we would save and close, and we can see this in our accounts payable reports. So the other part of QuickBooks that gets impacted by us paying bills, whether we're writing a check or using a debit card or using that pay bills function, all of this is going to go through our bank account. So our bank is going to be getting all of these different things coming through. It's going to see debit card payments, and it's going to see our checks coming through and clearing. As that happens, those things are going to feed into our bank feed section here. And at that point, QuickBooks is going to be looking to match those things up. So if we have a bill payment for $100, QuickBooks is going to be looking at all of our bill payments that we have in QuickBooks, looking for that $100 amount. And it's going to try to match things up. And it may say we've got 5 different matches for $100. And then it's up to us as the categorizers to go through and say, of those 5 matches, which one is the right one. And when it does that, it makes it really easy to categorize things from here because we just have to click match. And that's exactly the process that we went through when we uploaded our transactions and went through and matched and categorized everything. So we're always going to have to be looking at, is it going to the right account? But you've always got to be looking at QuickBooks and making sure it's doing things the way that it should. And that's why it's so important to understand how everything works together. So when you're telling QuickBooks to do things, you're telling it to do the right thing, and you don't have a mess to clean up afterwards, because that's where the headaches come from. We don't like headaches. Headaches hurt. In the next video, we're going to go into purchase orders and how all of that works with what we've just talked about with our entering bills and accounts payable and inventory. So stay tuned.